Greetings, Buzuni and distinguished lecturers. My name is Hanif Naufal Rifaniko, and in this video, I'll be doing a presentation entitled The Effect of COVID-19 Towards Auditing in Indonesia and the Philippines. This presentation consists of the introduction, theoretical background and literature review, research methodology, analysis and discussion, and last but definitely not least, conclusion. Now, first, let's talk about the introduction. As we know, the Earth was befallen with a very dangerous virus, which people refer to as COVID-19, or some may say coronavirus. This virus was developed from bats in Wuhan in 2019, where the smaller scale first appeared in November, which was then followed by a larger scale in December. And this virus was so scary that people who would normally work in the office, they cannot do it anymore because of the implementation of lockdown by the government. And it's so scary that the data from Worldometer showed that 6.5 million people died. Now, many industries were affected, and one of the industries that were affected is the auditing industry. Mori defined auditing as making financial statements trustworthy while ameliorating the internal control of the company, making the shareholder confident. And in auditing, the auditor tend to search for evidence, specifically sufficient appropriate evidence, where sufficient relates to the quantity and appropriate relates to the quality. So the evidence that auditor needs in general, based on the book by Ahrens et al., are physical examination, confirmation, inspection, analytical procedures, inquiries of the client, recalculation, reperformance, and observation. And things that were heavily impacted upon was the physical examination, as the auditors were not able to physically attend. Although inspection and observation were slightly affected, the procedure can be altered by conducting it virtually. And to reduce the scope of the research, two countries were selected. The first one is Indonesia, and the second one is the Philippines. And as can be seen, Indonesia has 2,416 listed accountants, whereas the Philippines only have 176 listed accountants. When talking about the geographical aspect, Indonesia is way bigger and has more population. And in fact, the GDP also suggested that Indonesia is a way bigger country. And it will be very interesting to know whether these two countries that are very different in size have different countermeasures towards the virus. And now this leads us to the research questions. The first questions in the research is, what are the effects of COVID-19 towards auditing in Indonesia and the Philippines? The second question is, how well does one country adapt to the COVID-19 situation compared to the other country in punctually issuing the financial statements? The third question is, are there any new regulations in terms of auditing in Indonesia and the Philippines? And the last question is, how did COVID-19 affect audit fees in Indonesia and the Philippines? Now let's move on to the theoretical background and literature review. A researcher found out that 3.2 million people died when the COVID came on a daily basis. It would mean that 0.04% people of the whole population died on each day. And if you want to look at further, then 1.12% people died every month. And if this keeps on going on, the total population will be divided into half eventually, which proved how scary it is. Now, as mentioned, auditing is one of the industries that were heavily impacted upon. And Mori had defined auditing based on his perspective, but there are two other perspectives to define auditing. The first perspective is from the Economic Times, and the second perspective is from Ahrens et al. From his ebook. The Economic Times defined auditing as different books of accounts that were examined or inspected by an audit, followed by physical inventory checking, ensuring that all departments follow the document system of recording transactions. And Ahrens defined auditing as the accumulation of evidence on information to determine the similarities between the information and established criteria. So in auditing, the auditor tend to provide service using their own techniques, methods, and procedures. The two different procedures are analytical audit procedures and substantive audit procedures. Analytical audit procedures is when the financial and non-financial data are compared, where substantive audit procedures is where the physical evidence is used. And after providing the service, the auditor will gain a remuneration in the form of audit fees, which will depend on the audit risk. Now, how do firms adapt to COVID-19? So the Carbon's team had surveyed 1,000 accountants, and they found out that the workload of these accountants increased by a lot. And in their survey, 7 out of 10 people were experiencing this. Additionally, they also found out that the remote workers increased by 43% when comparing before COVID-19 and after COVID-19. So what are the challenges that firms face during COVID-19? The first one is that more work for the employee. The second one is the increase of stress level. Their email also increased. There tend to be more meetings. It's very hard to communicate with clients as they need to do it online. We don't know what other employees or our colleagues are doing, and other reasons that were not specified. But then with challenges, there also come some benefits. So the benefits are, it allowed the employee to save many hours of commuting, and they can use that hours to do more productive activities, and they can also reduce gas and pollution altogether. Now, how do firms adapt to the pandemic? It's by innovation. Our research found that a large firm with many resources and small firms that are willing to change can adapt better to the pandemic because of how open their mind is. Now, what are the impact that COVID had towards auditing? So because of COVID-19, there are a lot of companies that were heading towards bankruptcy. And because of that, auditors tend to increase the use of analytical procedures because it's a lot cheaper. And these procedures' purpose is to help in audit planning, assist in gathering evidence, and review the overall financial information. But other than the procedure itself, other financial statement items were also affected by lockdown. The items affected were receivables, inventories, loan, bank and cash capital, revenue, other income statements items, investments, subsequent events. Now, Yuniarwati and Ardena surveyed 102 auditors, and they found out that the audit quality were impacted. As you can see in this data, there were more impact than no impact answers. Now, what about the financial reporting? Okay, so before we continue, it's better for us to define what financial reporting is. Russell defined financial reporting as a way to communicate its financial information to internal or external stakeholders using the core financial statements, balance sheet, income statement, and statement of cash flows. The things that can affect financial reporting is based on Oxen, the firm size, audit firm engagement, how independent their board is, the company's profitability, and the company's leverage. However, Putra and Nurhayati disagreed. They mentioned that the thing that affected financial reporting is only the company liquidity. This difference in result is reasonable because of the situation and condition that this research were conducted in. Oskan conducted the research before COVID-19, wherein Putra and Nurhayati conducted the research during and after COVID-19. Also, Dihan mentioned that the delays only occurred in the first quarter of 2022. And there were also changes in the deadline for the financial reporting. And this deadline were very useful for a lot of companies because more companies were able to report their financial statement on time due to the leniency. And provided is the deadline before the pandemic and after the pandemic for both Indonesia and the Philippines. Now, in terms of regulation, the audit opinion were adjusted. For qualified opinion, they need to be given when misstatements are material but not pervasive, and when it has been determined that financial statements are material but not pervasive. For adverse opinion, it can be given when the misstatement is material and pervasive. And for disclaimer opinion, it can be given when the misstatement could be material and pervasive. Now, what about audit fees? So as mentioned, the audit fees really depend on the business complexity, and the audit fees tend to increase when COVID happened because the risk assessment method needs an expansion, and the auditor needs to ensure that the client's going concern assumption is certain. Also, another study by Harjoto and Laksamana found that 0.9% there was 0.9% increase in audit fee for every additional day of lockdown. Now, research methodology. So this research used primary data which is written interview, and secondary data, that is e-journal, governmental website, online articles, and ebook. The written interview were given to 6 different respondents, where 3 are from Indonesia and 3 were from the Philippines. Now, as for the research design, this is qualitative data, specifically case study, and this research also used the triangulation method, that is the data triangulation and methods triangulation. Now let's move on to the main topic, that is analysis and discussion. So for this, to answer the first research question, 4 questions were asked, and after asking those 4 questions, conclusions can be made based on the respondent's response. So for Indonesia, they mentioned that deadlines were managed by working remotely through the help of an online communication platform, and similarly, the Philippines also used online digital tools and communication platform that they utilized to catch up with deadlines. The Indonesian side also used physical counts, such as stock counts. They do it virtually. And as for the Philippines, the reporting to alternative procedures, such as converting physical copies into soft copies and virtually count inventories. Now, in terms of key audit matters, in Indonesia, there were no significant increase of key audit matters related to COVID-19, whereas in the Philippines, there was indeed an increase of key audit matters related to COVID-19. And for audit opinion, Indonesia and the Philippines both mentioned that there were no significant changes in terms of audit opinion. So, however, although the Indonesian side responded that there was no increased related audit opinion, Ritonga and Suyanta had conducted their own research, and they mentioned that the unqualified opinion increased. And the difference is in result is because Ritonga and Suyanta had conducted their research in a more broad manner, and they've also used more samples to gain the result. And as for the key audit matters, it is very reasonable that Indonesia did not have any change in key audit matters, as CAMs or key audit matters only started in January 2022. Now, for the timeliness of financial reporting, 2 questions were asked, and these were the answer that was able to be gathered. First, how quick they are in realizing that COVID could affect financial reporting is really depend on how it affected the procedures for Indonesia. And for the Philippines, the swiftness varies and depends on each firm. And in Indonesia, there was a leniency for the deadline of financial reporting, and there was a leniency for the deadline of financial reporting as well in the Philippines. Now, for the third research question, which is related to COVID-19 and new regulations in Indonesia and the Philippines, 6 questions were asked. And below are the results. First, for Indonesia, no reforms were found for the auditing regulation except for the leniency of financial reporting deadline. And for the Philippines, there were reforms related to auditing transparency and for the leniency of financial reporting deadline. And for the second question, Indonesia and the Philippines have the same answer, that is, there was no elimination of self-regulation. And for the third question, Indonesia and the Philippines also mentioned that companies were encouraged to provide the disclosure of going concern assumptions. And for the fourth question, they also agreed that management were obliged to report on internal control. And for the fifth and last, that is sixth question, Indonesia and the Philippines also agreed that there needed to be a separation for audit and non-audit work, and the existence of liability cap depended on the engagement letter. Now, for the last research question, 2 questions were asked. And after asking this question, what was able to find out was that audit fees increased due to COVID-19. Also, clients asked for a reduced audit fees. For the first question, this can be supported by another data where the researchers had gathered by collecting the audit fees data for 30 different companies in 2 different countries, which are Indonesia and the Philippines, and ranked them based on the market capitalization. And then it was found out that in Indonesia, 22 out of 30 companies had their audit fees increased, and in the Philippines, 23 out of 30 companies increased. As you can see, it's more than 50%, meaning that the response from the respondents were correct. Now, let's move on to the conclusion. From this presentation, it can be concluded that Indonesia and the Philippines have similarities in which the pandemic affected auditing. And secondly, some procedures were hard to be applied, such as the physical examination. And thirdly, Indonesia and the Philippines were quick to realize that financial reporting could be affected by COVID-19. And lastly, similar countermeasures were applied, such as doing online meetings as well as counting inventory virtually. That's it from the presentation. Thank you for your attention and goodbye.